base and kept going, I would have stayed with it. But I would have started to keep moving my stops up, because sometimes, and I think because of where this was on the weekly, it would have led to the blow off top. But sometimes you can get these resistance lines and it'll base and it'll blow through, and that's almost like a buy area, which often leads to like a blow off.
Mhm.
But that's not what happened here. I'm just saying it because maybe that's something to watch out for.
Great. I'm not seeing any questions on Zoom, so I think we can keep on going with the examples.
All right, so net. So this was a trade that it really, there was a buy area at, I believe it was 46 that I had, and it exploded on volume. I remember tweeting out like, hold this thing, it's got big volume, and then I ended up like selling it through here when it had this, and then when it went up and didn't follow through higher, I got out of it. And I remember being real frustrated because I was real excited about this thing. I thought with the volume it had on this move, feel free to go back and study this, that it was just going to explode higher. But it just wasn't quite ready. And it's what it did is it came down in here and it tested the 20-day. It had an inside bar here. It had an inside bar here. In hindsight, I got pretty lucky. I bought it on this day. But really the breakout day was here. So let's analyze it from here because, we're not always going to buy it here, but this was the breakout day. And to me, this is a tough situation. You probably keep your stop down in this area. But once it follows through, you get your stop to this day's low. And then it explodes higher. To me, if this had finished up here more, I would have put my stop at this ignite bar low. But it didn't. So gave this thing room to test the moving averages. And that's what it did. It tested this moving average. It came back. It tested here again with a bullish counterattack bar. So right here, when it follows through here, moving your stop up to here, because this is kind of, I guess technically it's not a reconfirmation, but it sort of is. We don't take out this high, but we take out this price area. So move my stop up here mainly because if it had rolled back over here, like I don't want to lose money on this position. But then when you get the bullish counterattack, you raise your stop to this area and we kind of tighten. I think this is another buy area. I got to say, I can't remember whether I took this or not. I think I probably didn't because I already was in it. But if you weren't in it, this is kind of a choppy area where this probably looked like a buy area. Your stop would have been down here. And if it had gone out, you would have raised your stop to here, but it didn't. So you keep it below the little shelf and it chops, it keeps you in. Same deal. If I was treating this as a fresh buyer, I would have been pretty frustrated on this day. And I would have kept moving my stop up to this day's low. And then when it followed through, that's when you move your stop up to this day's low. And actually from this position down here, you also move your stop up to this day's low because it really pushes out and it reconfirms. Maybe you keep it below here, below the 10-day for this buy area, but for the second buy area, if you got it in here, you would be finally raising it to here. And you would probably feel pretty good because here you have risk down to here, right? All through here. And now when it goes, it's like you get to take your risk off the position kind of. So it goes up. This to me is kind of, I wouldn't necessarily call this a red flag. I would just say it got a little ahead of itself. You could almost say it's like buying interest. I'm sure there was news or something here. I can't remember. But this to me would kind of be your first, quote unquote, red flag, if you will. But we pull back and what do? We hold the 10-day. So 1, 2, 3, 4, 5 times we've shown respect for the 10-day. That's your moving average of relevance. And then we're also starting to see 1, 2, 3, 4 touches. Once it kind of pushes off here, hey, we've got a relevant trend line here too. So we reconfirm price strength confirmation. I'm just going to talk as if the buy area here because I explained where you move it. So we raise our stop here, we move up, we pull back. When we start to push up, I'm raising my stop to here again. Probably when you take out this area, I'm even the type of guy I'm moving it up a little bit to here. But we go up, we pull back again. And when we take out this area as high, you're raising your stop to this area, even though it doesn't quite follow through yet. It took that out. So that's your reconfirmation. Your stop's here now. We come in, we're holding the 10-day again. And we're seeing 10-day hold, 10-day hold, 10-day hold. I mean, it's pretty clear which moving average this stock is respecting. So is what happens on this stock. You get this doji here. So that's kind of red flag number one. You then get this sell down here. This was probably a good sell area in hindsight. I can tell you that's not where I sold it. But in hindsight, study these dojis when you kind of get extended into the moves like this. I can think of another stock that I traded last year, App, where I did sell the doji, which kind of played out the same way. But it pulls back, holds the 10-day again. If it had lost this day's low, like, you're definitely gone. And really, to be consistent, like, I think you could have used intraday price action here to get out of this thing, based on this also being a failed breakout and the couple different red flags we've already highlighted. But I'll tell you, for me, I was really watching this trend line. And when we got the doji, this bar, and then this bar, when we traded up and traded back down, and then what do we see here again? Gap up that gets sold. I got out of this thing when it went green to red. And you'll notice, I think, in all the examples we've gone through today, I think probably 3 or 4 of them, you've seen that gap up after kind of 3 to 4, red flaggish type days that got sold. And that to me was the area to look, if I traded this better, done a better job, I guess, maybe you get out in here somewhere. But this to me was a pretty clear sell area. You got the trend line with like 6 or 7 touches. You've got the 10-day, you've got the, kind of multiple days to take note, and then the gap and trap, which again, get those 3 to 4 days to take note days, and you see the gap up, don't get excited. If it doesn't follow through, which this doesn't, have your head on a swivel and be ready to hit out of that thing. That's something that I'm definitely cognizant of, because I've seen it so many times. And that is, net's gone much, much higher since then, but there's been other buy areas since then too. But for this specific trade, that was the trade.
Great. And there were a couple of questions with this one about how you deal with earnings, because that first buy from the downward trend line, I think that gap up was on earnings that got sold down. But just in general, how do you deal with buying shortly before earnings reports, and also how do you manage your position through earnings reports?
Sure. So it depends where the stock is in the cycle. If this was earnings, my guess is that I even though I got stopped out here, I made pretty good money here, even though I got stopped out, and I was in the money. So I'm almost to the point where I'm not even sure I'm really going to look at earnings, depending on where the stock is in the cycle, because I find oftentimes it does what it's supposed to do. Look, we could go look at Fastly, and I'll tell you, I got caught both in those gap downs. But in hindsight, the reason I got caught in those is because I was playing a stock that had already played out. Like, it had already made its move, whereas net was really, it broke out. I think I'd have to go look at the weekly, but it really kind of broke out at that 46 area, and this thing was kind of just getting going. And so I'm more looking at kind of the cycle and how the stock is and where it is in its cycle. And I'm trusting my rules on that. So I will hold into earnings. I know a lot of people won't. I will say, if a stock now, kind of after getting hammered in Fastly last year, when a stock's extended into earnings, I will take some off the table or exit the position. And my thought process on that is that if it's already extended into earnings, the earnings could be really good and the stock might not go anywhere, just because like it's already moved a good bit. And I can show you a couple examples of that. AMD recently, on its most recent report, it was extended and I got out of the stock, and I think I bought it back on the bull flag, like literally maybe a couple points lower. So kind of my rules on earnings are, I either need to, one, be partialed out into earnings, and that's usually going to occur, let's say, just for, because we have this on the screen, let's say net was going to report earnings like right here, and I bought some down here and it's already moved, like 60%. I'm going to be partialed out going into earnings there, because if they miss, there's a lot of room for it to fall, right? Um, but if they report well, it may not really go anywhere because it's already moved a long ways. So it's maybe like if they report well, it's like, okay, all of this, people expected it to report well, and it just kind of chops. Um, or secondarily, I have to be willing to add to the stock after earnings. So I need to be partialed out into earnings. Usually, if it's moved away, I'm going to be partialed out. Or secondly, I need to be willing to add to the position after earnings. And that is a situation where I believe we're earlier in the move, and good earnings could ignite it to move higher. And therefore, I want to be willing to add on that good earnings report, if that makes sense.
Yeah, for sure. I think those were the main questions I saw associated with this chart. So I think we can move on to the next example.
Okay. All right. So NVIDIA, this is yeah, there it is. The date's on the bottom of the chart. This is May this year. We had been in a correction. I've already gone over this descending channel and everything on the buy one, so I'm just going to go over the management. But
Mm-hmm.
we had the wedge pop, the descending channel buy area. So if you buy here, your stop is the day's low once it kind of follows through. And then when we gap up, like literally day two, your stop is really being moved up. And the nice thing is here, you're kind of protected by this moving average cross a little bit, right? Um, and so we go up and we consolidate. And here's an example where um, we were a little bit extended, but we're still kind of early in the move in reality. Like we haven't even broken out to new highs. And they reported earnings, and this right here is the day after earnings. It was one of the weirder reactions in that we basically didn't do anything. Like we didn't go higher, we didn't really go lower. It was kind of weird. Um, but then this bull flag, I actually added to my position in this. And that was kind of what I was thinking, is that, if I was going to hold into earnings here, I had to be willing to add. I felt like if they missed, like I had a lot of protection down here. Now, naturally, like could it have gapped down and lost the 200 day and like, really blown up? Yeah, it could have. There's a risk in holding into earnings. But based on the buy area, I felt like I had protection from a lot of these moving averages, and it being early in its cycle. I thought it was worth holding in, and sure enough, it was. It went up. I can tell you, I think I showed you guys before. I had a rising resistance line drawn on this thing, then exited this, um, but then bought it back. I think that was a mistake because of how early we were in this move. Um, but if we're just working the rules, when we took this out, we reconfirmed this buyer. You raise your stops here. To me, this is an ignite bar. You raise your stops here. Um, I guess this is an ignite bar too, and it works. Um, I might not have raised my stop here because I wouldn't have got it shaken out. You didn't get shaken out either way, so it worked. So I don't know why I even bring that up, but just try to give you insight to my thought process. Um, this would be, to me, a later stage buy area right here, but still valid if you're going to take it as like a swing type trade. Um, but for lower buy areas, buy area A, B. So I think like you want to be saying buy area A, B, and anything after A, B, I think are more swing type entries. So A, B, we reconfirm raise stop to here. We reconfirm again, raise your stop to here. This is the first extension. I can't remember what stock we were talking about earlier, where I said I'll show you in the video like a big shakeout bar that got supported. That was this on the video. It supported. You raise your stop to this day's low right here. So basically, stop raise here, stop raise here, stop raise here, ignite bar, stop raise to this day's low because it's a breakout too. Pull back, stop raise to here, and really when we reconfirm in this instance, since my stop's already here and it's such a wide area, I'm probably raising my stop to like this area. And then when we really push out, I'm raising it to this area. And then you follow through more. I'm raising it to this breakout day low. I think even this is a little too late to even treat as a swing entry. It worked, but only in hindsight. Like this could have just been like a little bar up. So this would be too late. I think maybe this would have been your last swing entry. But but your stop trace to here and we go up. This is an example of that doji that I talked about earlier. I talked about with apps, and then I showed it on net. But we get the doji and you gap up, and it sells down. I will say I did a pretty good job here, in hindsight, obviously. But I was able to exit this here. But I almost think I got lucky, just to be honest, because we pull back, and really the way that this sets up is we sort of hold the 10-day here. It doesn't touch it, but it's that first pullback, second, third. This is really where we show the 10-day, really second test of the 10-day. The way is what I was thinking on this, and why I got out of it is we kind of held the 10-day this whole way. And then I felt like on this pullback, we were starting to hold the 5-day. And when I saw the doji and the gap up, I was thinking that this was kind of that acceleration into the top. So that was my thought process. But in reality, if you didn't exit that, we held the 10-day again. We go up, we hold the 10-day here. And then I think this was the trend line break. And this wasn't as defined of a trend line. I mean, you had touch point 1, 2, 3. Yeah, I guess it was 3, 4. So this would be your exit if you were going to continue to use the 10-day and the trend line stop out. So two sort of thought processes. One was we were holding the 10-day, felt like we were starting to hold the 5-day and accelerate into the top, saw the doji, saw the gap up. So that was my exit. That was more of the kind of aggressive sell into strength type of exit. And this was the more, 10-day EMA trend line exit right here. And then at that point, the trade is over.
Yeah, and Jay points out $200 failure as well here.
Yeah, $200 failure. Again, another good point. That's probably something that I need to look for more. Thanks for pointing that out.
Perfect. Yeah, I don't see any specific questions. I think we'll do NVIDIA part 2, and then maybe take another break and then finish strong. How's that sound, Oliver?
Yeah, that's perfect. That's perfect. So let's look at NVIDIA. This is fresh, and I'm sure a lot of you guys were probably in this trade. So NVIDIA breaks out around 208, 213. I went over this on the buy episode. So we break out, and to me, when we kind of follow through here, your stop is this day's low. You could almost view this as kind of reconfirmation, but I don't feel like there's enough of a shelf here. But I think right here, you could view it as reconfirmation and raise your stop to down around this area. And then when we break out here, this is technically an ignite bar, and you could raise your stop to here because it's just breaking out on the weekly here. I would probably want to have my stop down in this area just in case, to give it some wiggle room. But then we get this wick play setup, and it's kind of your B entry, and it breaks out of here. If you're on the A entry, I think at this point you are raising your stop to here, and then kind of when it follows through, you're raising it to here and here. But if this is your entry, your stop's here, and then kind of when it follows through, you're raising it to here. And then right here, when we push higher, I think for all positions, you're raising it to this area, even your A entry, like right in here. But then, you've definitely managed your risk at this point. And so I personally was sort of in sell into strength mode here, because I was just kind of looking at the weeklies and thinking we were getting really, 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 really extended, like big picture. So I exited into this extension, because I was thinking extension sell rules, which in hindsight was a mistake, because I did end up trading this a couple more times here, and it just it was harder to get back involved. And that's kind of that idea that, sometimes you're going to sell an extension when you should be using trend rules like the 1020 EMA. And sometimes you're going to use 1020 EMA rules and you should be using extension rules. But that's the art of how you sell, which you're not always going to be right. But so to me, this was kind of that empty wick. And then this was sort of the lack of follow through, but it also didn't fall apart either. So this was kind of like, red flaggish number 1. This gap and fade was red flag number 2. But overall, this whole section here is the first extension. we pull back, and now the stock shows us what moving average it cares about. To me, this is kind of like a 10-day hold here. So here, here, here. And I think part of the reason I sold this extension is because I knew earnings were coming. And I was a little concerned with kind of how stretched we were on the weekly of holding this into earnings. I just kind of been able to sell AMD before earnings and get it back. So maybe that played in my process. I don't know exactly 100% what my psychology was. But, I'm just trying to talk freely. But basically, we gap up on earnings. But to me, this is the second extension on NVIDIA. First extension, second extension. I think most people would agree, like overall, you're getting a lack in momentum here, but you're still holding the 10-day. And I snipped this chart before this played out, but you'd have a trend line drawn all the way up through here, which we eventually ended up losing. So if you were using your 10-day, then also you get the trend line rules. We end up losing the 10-day and the trend line on the same day, which I can't remember if it was Thursday or Friday of last week or whatnot. But it was one of those days. And I think I showed a chart of it in here earlier that showed we lost the trend line in the 10-day, and that was your sell area. So if you think about it, buy add, stop here, reconfirmation, stop here, buy add B, stop here, or A position, stop here, reconfirmation, raise your stops, ignite bar, raise your stops, first extension anywhere in here. I think if I had played this better, I would have exited, a third or whatever we talked about earlier. But pullback, continue to starting to show respect for the 10-day. This trend line is starting to develop here. Second extension, if you recognized it, exit into that. But I'm sure, this is how divergences build, is you have the high, you get the high that fades. So if you drew this top here, it fades. And then if you drew a line here, it fades. That's how a divergent builds, where we're moving up, but there's no follow through. And then your exit, if you were using the 10 EMA trendline rules, would be when we lost that area, which happened a couple of days ago. So now kind of the thought process on NVIDIA is it's extended from the 10-week, and it's probably going to rebase here. The doom and gloom is that it topped here. I don't have a clue whether it did or it didn't. For me, it's just kind of, we'll see if it builds a new base. And if it does, we'll get another buy area. And if it doesn't, you're out of the stock.
Perfect. I don't see any questions coming in on NVIDIA, but there's a good one from Mark. When you are at a profit and keep your stop far away to avoid your shakeout, how much percentage are you willing to give back before moving your stop higher? Or are you just looking at where it reconfirms and that's your stop level?
Yeah, I'm mostly just kind of looking at the stock, because again, for like you got to be careful with like a small cap, like you're going to have to give it more room, which right. is naturally more risk, but you might have a smaller position in that stock because it's a more volatile stock. So whereas a stock, like for me at least, like a stock like NVIDIA or Tesla, like I'll take pretty big positions in because they're bigger caps, they're liquid. And that's more what I'm kind of used to trading. Like, look, if I can hit a Livongo or a Fastly hard, like that's amazing. But for the majority of the stocks I trade, they're probably more. Well, really, I like to think I take what the market gives me. And lately, like the market's been rewarding these types of stocks. Whereas like giving back like 20% of your gains in like a NVIDIA or something is a significant amount, in my opinion. Whereas in like a Livongo or a Fastly or some other names we talked about, that stinks, but it's probably not totally always outside of the personality of that stock just because of how it moves. Like for example, like if you're like a recent stock that like, I thought was maybe going to work, but didn't really, like that MTTR stock. Like, I don't think you can trade that stock with like, hey, I can't afford to give back 5 or 6% of my gain. It's like, you just can't even trade the stock correctly. So you're better off like taking a smaller position on it, or you could take a bigger position and try to take some off, and then so it allows you to, kind of hold through. A natural movement for that stock might be, much larger than a stock like Nvidia or Tesla, or even Apple. I would expect the pullbacks to be less than like a Tesla or Nvidia, just because of how they move.
Yeah, I think that's an excellent answer. Um, and yeah, I think at this point, let's take a. Do you want to do a 5 or 10 minute break? Up to you.
I'm good to do a five. I think we got a
Okay.
couple more to run through, so maybe let's do a 5 minute break.
Yeah, let's do a 5 minute break. Come back around 2:47 or so, and finish strong.
All right, cool. So next, I'm going to look at Roku, and I'm going to show you, you know, with Roku, not every trade worked great, but then there were some great trades in here, right? So this is, if you go pull up Roku and look at the weekly, sorry, excuse me, there was like a bigger weekly descending channel here, and then you have this tight channel. Really, the wedge pop was down here, and this is almost sort of like a crossback in a way. But inside bar, this was sort of, in my eyes, actually sort of an advanced buy area, if you will. Um, and we break out, and that's the buy area. Stop goes down here. Up here, I think, is an additional buy area, and then you have a cup with a handle, two inside bars. We break out. This is kind of buy area B, and your stop would be, down here, moved up to here. And for stop area or entry area A, your stop is here. And then as we follow through, all stops are kind of brought up here to this area. So we go up, we pull back, and when we move higher, kind of similar to net, like I'm moving my stop up to here, and I'm continuing to let it trade, and it does. And for me, I know my personality, and action like this, I'm getting really frustrated because we're not really moving anywhere, but also nothing wrong has happened to the stock. So you got to stick with it. Um, and just like this right here is technically a buy area. I can tell you if I'm already in something. This is buy area C. Probably not taking that just because it just hasn't really been moving. But when we move up, we've officially reconfirmed. And right here, you move your stop to here. Probably here, I'm actually moving my stop to here. And I can just tell you, in this bar, I'm expecting to get stopped out. I can just tell you that. Doesn't happen. Kind of get lucky. And when we move up and definitely take out this area, I'm moving my stop to here. And when we go up, you could have been stopped out here because we technically scum this area, but we do hold the 20-day. But then here we trade up and down, and the wedge drop is here. So wanted to show this one because it's a trade you're in for like a while, and it just doesn't really work. I mean, it works for like, 8 to 10. I guess if you had it perfectly down here, it worked for like 12 or 13%. But I think we all agree, like, at this point, you're kind of expecting it to go up and hopefully trend the moving averages, like some of the other examples we've shown. And it just doesn't, which that's okay. Like, again, that's like part of a lot of your trades are going to be like this. But we come down and we set, and we tighten in here, and we have another wedge pop here. And this is a buy add area. Initial stop loss down here. Once it kind of gets going, you adjust your stop to here. We base inside, and when we take this out, reconfirmation, I'm raising my stop to here. We continue higher and push up, raising my stop to this area right here. Shake out here. If we had come back higher, I would have raised my stop to here. Instead, you get stopped out of the position. So it's kind of like, man, like I've been in this thing twice, and yeah, we've made money, but it just like hasn't really worked, right? It just hasn't worked, and it's frustrating. But this is often occurring when the index is just not quite ready. And it's really the stock's actually showing relative strength, but the market's not ready, right? Or maybe the market's ready for a couple of days, and that's when you're getting these bursts higher, but it's just not ready to really go. So what happens? We come down, This almost reminds me of that Zim or Zoom example that I was talking about earlier, where it was kind of like the market was falling apart and it was testing on the 50-day. Like, see how we're holding here? We get an inside bar and we have a wedge pop. We pull back, and this is sort of like that flaggish type action, and we break out. So we break out. Your stop's down here, and when we follow through, your stop is moved to this day's low. This is buy area A for me. We move up, we pull back. This is kind of like a bull flag, but it's not clean. It's not really, but I can tell you, I do remember, getting in on this. And this is kind of buy area B, either here or like right here. But either way, buy area A, when we reconfirm here, you're raising your stop to here, and taking note of the fact that it's holding the 10-day. It's still very early in the move though, so it's just something that you're cognizant of, right? And then we move up. This is like a breakout bar from buy area A. You're now, you're definitely moving your stop to here. And if you even buy area B is right here. And then as we follow through, for buy area B, I think you're moving your stop to here. For buy area A, I'm waiting for a little more follow through, just because. And when we do kind of get this follow through here, now all stops are to this ignite bar low. And then we're moving higher. This is kind of that situation where you might feel a little bit exposed, because we're not really getting a pullback and an area to reconfirm on to raise stops. So we're a little exposed, like 10% exposed in a name like this is a decent amount of exposure. And we gap higher here. You might almost even be thinking this is an exhaustion gap, but we consolidate out, and then we finally reconfirm. And I raise my stops to this area. Now, this right here is an example of an ignite bar with very little volume. If you were to go look at this, there's not a lot of volume on this. And this is kind of an example of an ignite bar you want to be a little suspicious of. And sure enough, we trade inside one day, we gap down, we come here, and then I got stopped out of this position. And it worked. It worked for like 25 to 30%. But look, I can tell you my personality, I'm probably never going to be able to sell like the low volume ignite bar. I just kind of know that about myself. But we get stopped out here. That's the end of the trade. So basically in this, there's been 3 trades, and like, I get it. You could have held this and made like an 80% gain if you just held through all this. With my strategy, like I took, like a 10 or 12% gain, like a 6 or 7% gain, and then like a 25 to 30% gain. That is a drawback to my strategy, is that you are going to get a little chopped, or just things aren't going to be perfect in these more choppier type of trades, in these choppier environments. But I'm showing you this because like that's just how it is. Like it's how it is. And I wish I knew what every single stock was going to do, because then I would act accordingly. But sometimes you get these areas here, and it breaks the 50-day and goes down, and then you don't make any money. So it's just like, I show you this so you can kind of see the advantages and the disadvantages of the strategy. This was a really awesome trade, even though it didn't work as great as I would have wanted. If you compound trades like this throughout the year, you're going to absolutely destroy it. And sometimes this is going to base and go higher, and that's when you're going to get like your 50 to 100% winner. And if you can get a couple of those a year, you're really, really going to destroy it. But in reality, like, a lot of trades are going to be these types of trades. So just like remember that. So that's kind of Roku part 1.
And there's actually a question, Oliver,
Yeah.
from Josh. When you're buying and getting stopped out repeatedly, what keeps a stock like Roku, for example, on your watch list?
Well, like, if you go back and look at this time period, like the indexes, we're not, you know, it was like a time of year where, even though it was an awesome year and we went up most of the year, like this was the time of year where things got a little bit choppier on the indexes. So you have to take that into account, and you have to take the relative price strength of the stock in relation to the index. So that's kind of what kept me on Roku. And I liked the story at the time of Roku. I then learned more about Roku, and personally don't know why Roku exists, but that's just my opinion. And so I kind of, was taking all that into account. I'm taking the overall weekly into account, and that this is really where the stage one area was.
Mm-hmm.
So, like in stocks that are still in their early innings, if you will, I like to try to stay on them, because I think, and this is like how Zoom kind of traded for me too. Through COVID, it was like showing relative strength, but I had a lot of chop trades, but then eventually I ended up having really good trades in it. And, you'll see that's kind of what happens with Roku as well. So I don't know if that answers your question or not, but it's sort of like the indexes just weren't quite ready for the stock to move higher, but it was actually on a relative basis, like doing pretty well. The market was just kind of holding it back. So that's why I stayed on it. And then it kind of fits the mold of stocks I look for, and that it had a story, it had earnings and sales, it's high price. Like I like high price stocks. So it kind of fit, it checked the boxes of like a top dog type of idea. So that's kind of why.
And to fully get kicked off your universe list, it would have to break down through the moving averages and that type of thing. Yeah.
Yeah, and it never really like look, it chopped me out of my positions, but this never really breaks. Like somebody could have reasonably held through this, in my
Yeah.
opinion, somebody with a more patient personality than me. Now, holding through like this would have been harder, I think, without, having hindsight on it.
Mm-hmm.
But this, I think you might have been able to hold through. This might have been a little harder, but if you go study, like William O'Neill would have held through this for sure, because basically all this does is build a shelf right here, and it supports through here the whole time. And maybe at some point when I get chewed up enough in stocks like Zoom and Roku and the indexes aren't ready, I'll recognize this and I'll be able to hold. I'm just not quite there yet. But that's why it stayed on my list.
Gotcha. Perfect.
Yeah.
Yeah, I think we can move on.
Okay, so trade two in this thing is so let's see. Down here we're basically around the same price. It kind of kept chopping around, and we get a buy area right here. So buy area is here. You might have been able to say this was your buy area right through here, and your stop would have been here. But either or, it's one of these. If it was here, your stop was here, and it never really followed through until here. So when it follows through here on this area, you'd raise your stop to here, and on this area, once it follows through, both would come to the day's low. I think another entry you could consider was this type of flaggish type look where you take out this day's low and your stop would be down here. But in all scenarios, depending on how you analyzed it, at this point, your stop now moves to this day's low. And I think when you kind of get this follow through here, your stop is roughly to about your break even. We go up, we reconfirm, your stop is brought to here. We nearly test that, but we test the 10-day. This is an example of kind of early in the move. If it's above the 10-day, the stock is likely okay. And we go up here and we reconfirm. So now you're raising your stop to here. And really at this point, as the 10-day kind of rises, you're sort of utilizing that 10-day moving average. And as we go up, so this is an example earlier, like I showed the trend line and how it used the 20-day. I will tell you, like, more the way I trade is I'm kind of getting off here and rebuying here. I think both are valid. Realistically, the way I analyze this is I saw 10-day hold, shelf here where we reconfirmed, raised stop to here. And I felt like we were holding the 10-day and we had built like a little trend line here. And when we lost this area, you get out of the stock.
It's a little frozen rope-ish there, just a little bit.
Exactly. It's a little
Yeah.
frozen rope-ish. And then is what we do is we create a descending channel or flag or whatever. And this is another buy area. Stop here, follow through, stop to this area. This is like an ignite bar where you could put your stop here, but sometimes when I get that ignite bar on like day 2 or so, I try to not choke it, even though I really don't want this ignite bar low to go. Like
Right.
definitely not. And I would say it rarely does. And in reality, when it does, I probably want to be selling it anyway. So really, my stop is kind of here. It's just I'm not actually putting it there in actuality. Um, but we move up, and you know, right in here we reconfirm, and you raise your stops. I do think this is kind of like red flag 1, 2, and really this is a rising resistance line right here that we fail at. I can tell you that I didn't notice it, but for me, this is where I exited on a wedge drop right here, where I felt like we had built a little shelf here below this follow through breakout days low, and that's when I exited it. So this is really the first extension to me, um, and then is what we do is we come in, we basically create a little shelf here, and we have another wedge pop here. Your stop would be this day's low. I think we trade and create another pivot kind of here, and when we take that out, that's when moving your stop up to kind of your purchase area level, little 2 day area. When we take that out and move higher, you're moving your stop up to here. This is an ignite bar on volume. You're adjusting your stop to this day's low, inside, almost sort of inside, but it almost kind of fails there. Right here, I'm expecting this to follow through, um, but it is sort of the third extension. I would have thought this would have gone higher, but it didn't. And when we got this outside reversal here, and we lose this bigger trend line, you know, that's your exit area. If you're aggressive, I think you could sell right here, which because of these 3 days lows and the fact that even though I played these small areas in here, the true trend is defined by these pullbacks to the 20 day and
Mm-hmm.
this trend line. And this to me, when we lose this area, is the sell signal. And then if you know, look, if you wanted to try to wait for follow through confirmation, you exit here on this gap down. Um, and I would say when you get gap downs through areas like this, you want to exit because they could easily really tank. This one ends up holding up for a couple days and then selling. Um, but yeah, there were a couple trades in here, and I had determined the 10 day was holding this, but I think it would have been reasonable for somebody to be more patient and determine the 20 day was. Either or, the overall trend, even if you took this trade and then this trade, you had to recognize the relevance of the 20 day in this trend line. And when we lose this area, you know, it's this is a real breach. This is still playable, right? You're above the 20 day, you know, you're above the 20 day, but this is a real breach. And especially here when we lose the 50 day, you know, the stock, for me at least, pretty much becomes of no interest, um, you know, until it resets, which is going to take, you know, quite a while. And in this case, it ended up building a punch bowl of death and topping. Um, but yeah, that's kind of how I analyzed Roku, and kind of how you could implement the strategy with Roku. So basically, breakout, follow through, stops here, reconfirmation, stops here, reconfirmation, stops here, starting to follow the 10 day. First little kind of profit taking, reconfirmation here, gap and trap, kind of second little take note of. This is sort of a frozen rope 10 day trend line. And when we lose this area, you know, I think you could have sold this day or through this low, which, you know, it did recover, but you wouldn't have known that at the time. So, you know, you would have been out of this thing. Let's say that you sold it here rather than here. You know what? You would have been out of it like 327 off like a 230 entry. That's like a 40% gain or so. And then on this one, breakout, stop trace to here on the ignite bar, reconfirmation here, this gap, your stops are here, reconfirmation, your stops are in this range. And, let's say that you sold down here. Let's just say you sold here just to lower the percent gain. You're making about, a 17 to 20-ish% gain or so. Similarly here, breakout, reconfirmation stops here, reconfirmation stops here, moving up. And, let's just say you sold. I do think it's pretty reasonable to sell in this area, actually. And I also think when it goes red to green to red, you could have got out up here, but let's just say down here. So let's call it like 435 versus, we'll say 410. Not as good, but you string those three together. You probably did better with my strategy than holding in this instance, whereas, before you obviously did worse. There's trade-offs.
Right. I'm not seeing any questions. There's a question about how you use the 5 EMA a little bit. You've probably touched on that a little bit, but it might be worth mentioning again.
Sure. So I only started using the 5 EMA more recently, for two reasons. One of my mentors, Jeunesse Capital, he, uses the 5 EMA more on like faster moving names, maybe like a small cap where they really show, maybe an IPO, like it worked well on Bros. And then, there's this guy on Twitter, Tony Stark, who I think is probably a exceptional trader, if I had to guess. And he's kind of made me realize that you can really start to see the change of character better by leaving the 5-day on the chart. And as I put it on my chart, I've decided to leave it because I do think, like right here, you can clearly see the change of character, and we kind of ride up it, and then we, come off it and ride up it and come off it. And it's faster moving. Like I'm not looking to manage my positions with it, but I am looking to, I can see the change of character. Those of you guys who follow Brian Shannon, which I highly recommend, I've talked about his book multiple times. He said that he doesn't initiate swing positions that fight the 5-day. And I think that's valid because if you look at all these buy areas, this buy area is above the 5-day. This buy area right in here is above the 5-day. This buy area right in here is above the 5-day. Below the 5-day, below the 5-day. So it almost kind of just helps you see the flow of the stock, but it's too fast, I think, to manage the trade because most of these bars like are ticking below the 5-day. So like, I don't think you could really like use the 5-day. But then when you see that acceleration near the end of a move, I do think that's when the 5-day is most helpful as far as, in a bigger cap-ish type name, seeing that acceleration and picking up on that. I've more recently added the 5-day to my charts. It's not something I used at all last year, and I'm liking it. So that's what I can say about that.
Great.
Yeah. All righty. So what do we got next? So to me, Tesla has been it's like the most important stock. I actually think that I should probably only trade Tesla and I would do a lot better. But I don't. But I think Tesla is like the leader of the market from the point of view of a stock with like enough market cap to really matter, but then it still sort of moves like a growth stock. And obviously like last year and stuff, it was. Whereas like Apple, I think Apple, Amazon, like those are the leaders of the market to me. But, they're not going to move on a percentage basis like the same way as like a young growth stock. Whereas I think with Tesla, you kind of get the best of both worlds. So this stock, like a lot of people probably made their fortunes or whatever you want to call it in Apple. Like Apple was a huge stock, the last 10 or 15 years, basically since I started trading, Apple was the first stock that was like the stock. And now as I've more like been trading like more seriously and actually feel like I sort of know what I'm doing, Tesla's been the stock that I feel like I've sort of developed on a little. So I love this stock. I think it's the leader of the market. And so I want to run through this thing. Um, Basically, we have a big gap up here. You take out day one high, that's the buy area. I think is what we've seen with our earnings gap ups that really work is they take out that day one high like like right away. And I think I read something, I haven't verified this, but I read something or someone told me this that um, I think it was those O'Neill Disciples guys. I'm not sure, but if like a stock that gaps up like doesn't go by like day six, it's likely going to base for a longer period of time. I don't know. I just thought of that, but um, you know, notice that the best ones are usually going pretty quick. So we go. Your stop is here. We pull back. We're holding the 10-day. It's early in the cycle, and to me, I'm probably getting like time stop kind of in here. I really can't remember what I did. This was so long ago. But either or, if you did, that's okay. Your next entry or your initial entry, whatever it may be, is this buy area, and this is the one that really starts to work. So we take out this area. I think your stop is like below here, below the 20-day. And as we start to work higher, it doesn't really move with authority until this bar. But at this bar, you're adjusting your stop. Roughly, let's call it the 70 area where you're protecting your buy zone. Um, we move up. This is the first pullback. This is a bull flag. I would call this buy area B. This is an outside reversal candle too, if you remember the buy section. And when we push through, you're reconfirming, you're raising your stop to A to here. And when we follow through here, your stop on buy area B is now here. A is still down here. But then when we reconfirm through here, now your stops on everything are in this range. Um, so we move up, we pull back, we reconfirm again, your stops on everything are to this area. And then I'm kind of taking note like, hey, we held the 10-day here. We move up, we pull back. Okay, we held the 10-day again, second test. You could consider this a flag, a buy add. I think with this gap, and it would be buy C, you're probably not chasing that gap up. So I'm just going to follow up in buy areas A and B. And any of these other buy areas at this point, you could have tried this and this, but they're all swing cash flow buys. So I'm focusing on buy areas A and B. So we move up, we reconfirm second test to the 10-day. Shooting star here. This is sort of your first, like, oh, maybe some people are taking profits. But there really hasn't been any signs of distribution. And even following the shooting star, there's no downside follow through on it. We support on this gap. And then this is an example of this gap down. It's almost like a nice thing in that you correct and it's a counterattack bar. You raise your stop to this day's low. And then when we reconfirm and follow through, you're raising it to here. I'm not raising it to this day's low until we follow through on that. It's still like down here because you don't want it to fill this gap because it's so big. But it's reasonable that it could kind of pull back into this range and still be fine. We don't just want to look at this chart. We want to try to create something that's going to work for all our situations. So your stop is kind of still down in this area. But then when we follow through, this is an ignite bar on volume. So not only would you raise your stop to here, you're raising your stop to the ignite bar low. And this is like pretty extreme for the fact that we're, it's 100% into the move. And then this to me is a blow off top. Huge volume. I thought this was a blow off top at the time. I personally thought it was pretty obvious. And I think for a blow off top like this, you take your position off. But let's say you didn't. Let's say you used the 10-day. I mean, this would be a tough day, but if you had it here, I mean, you supported the 10-day. It's definitely getting loose here. Like, I don't know how you can think it's not loose. And we hold the 10-day again. So what do we have here? 10-day, 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 5 tests of the 10-day. We come up, and to me, This is your wedge drop here. So if you had had the ability to hold through a blow off top and the impeding, 25% pullback, your wedge drop would be right in here. Let's just call it 165. So, really you got to move from say $70 to 165, about 100 and what is that, like 35 or 40%. But I do think this blow off top is pretty obvious. I think that because of the just extreme move from 115 to 190 in 4 sessions, this is an example where your open risk, like, do you really think that this is going to go another 75 points, like just straight up? I mean, maybe. Like, I always see people who say they're position traders who are like, oh, well, Qualcomm like went crazy. If I had sold into this, I'd miss the move. It's like, well, Qualcomm was like one stock that happened like 21 years ago. So I think generally speaking, you're better off selling into these types of blow-offs than like waiting for the next Qualcomm. If you're trying to build a more consistent business, which is what I'm trying to do. But I would say take note of this. Is it this chart? Is this yeah, I personally think Tesla today reminds me a little bit of this. But I won't get too into that right here. But basically, what do we got? Buy area, flag, reconfirming, raise stops, 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 ignite bar low, blow off top. Sell into that. Okay, if you don't, 10 days clearly been shown as the moving average of note. We continue to hold it and you get your wedge drop here. If you are the type of person that really wants to wait for the wedge drop, no problem. It protects you and takes you out of the stock. I can just tell you for a fact, well, not for a fact, but with my personality, I would have caved on this day after this. If I didn't sell this, I just know myself, and that's what would have happened to me. So this is an example where the price is so far from your stop level that at worst it makes sense to reduce your position, because the volatility to hold this is going to be so high that it's going to be difficult to hold through that pullback, unless you're just so mechanical that you're going to use the 10-day. And I think there's a lot to be said for that too, if you can trade that way. So that is Tesla, sort of 19 into 20, quite the move. And then we have the COVID, correction, which I've shown you guys all of that before. This is the wedge drop pop coming out of that. If you didn't take it here, this is kind of the buy area here. So let's just analyze it from here. You get it here, your stop's here, we follow through, you're getting your stop, in this range. We move up, we base, we reconfirm, and you're getting your stop here. It then had earnings, which it sold off hard on, and it finds support at the 20-day in this area. Notice how it respects the stop area, and we work higher. It continues to hold the 20-day. So 1, 2, 3. This is the next buy area. I actually think this was pretty unique in that in reality, this is kind of buy point A in a normal market. This is kind of your cup and handle. So really, I think that these buy areas all the way up until here are really, I think this is buy point A, this is kind of A1, and this is buy point B. So I think you should buy and add more here for sure, here and here. Your stop would be below here. So you follow through, you kind of get your stop to this area. If you take this buy area, you're buying here, your stop is here. But as we follow through, buy areas pre-A and A are here. Buy area B is now to here. As we follow through higher, all stops are kind of in this range-ish right here. And really your buy areas down here, maybe you're even giving more to the 20-day. I know my personality, the most I'm giving is to right here. We move up, we pull back. I would probably say, we're kind of holding the 10-day here a little bit when we come through, but we don't reconfirm yet. We hold the 20-day and show the 20-day again. This is a nice solid base. This is buy area B. I think this is definitely a buy area you want to be taking. If you're taking this buy area, your stop is down here. As we follow through, your stop is here. As we kind of follow through again, all buy areas, pre-A, A1, and B are right here. And part of the reason I think people were able to do so well in Tesla last year is because of the way you got like 4 buy areas off the lows in Tesla. And like, look how uniform it was. Um, so, you're able to get a lot of stock on um, because of the way that it traded, which is why big corrections are awesome because you get to see the best stocks and they give you a lot of opportunities to get on, and the buy areas follow through because it's like early innings, whereas late stage I think we're seeing a lot of buy areas get scummed. So basically, we're right here, we're moving up kind of I think it was net we looked at earlier where I would kind of expect like a little bit of consolidation here, but when we move higher through here, I'm probably moving my stop to here, and then you move higher again. And once we for this, because we've kind of had multiple gaps, I view that as a sign of strength, but also blow off you a little bit. But I might want to give this Ignite bar a little room. But once we put in this area here, this to me is a very late stage swing entry if you're going to take it, because we're really getting extended. Notice the acceleration and that we've held the 20-day the whole move, and now we're pulling back, finding support on the 5-day. So when you're breaking out here, your stop's going to this day's low. And I do think it's reasonable to sell this extension because of the acceleration up the 5-day. But if you don't, the wedge drop here takes you out. And notice a couple things here. We kind of push up here and they fade it, meaning there's no follow through, a potential lower high versus this outside reversal. So outside reversal is a reversal extension. And then similar to some other examples we've shown, they gap it up and sell it into the wedge drop. So if you didn't get this and you got out here, call it like 310 or something. Even from the latest buy area, you had like a 50-60% gain, and from the first buy area, you had like a 200% gain, which is we need more of those. But then through here, even if you didn't take this wedge drop, which I feel like with the acceleration, I think most people would have, but you definitely get it here through the 20-day at worst. And that's kind of the trade off the lows in Tesla. And so any questions there, Richard?
Yeah, there was a question about back at the end of April, why wasn't that a wedge drop? Those 2 days where we had the gap up and then sell off and then the fall through the next day.
Yeah. So I think you could have treated it that way because of earnings. I think you could have definitely treated it that way. I think this is a unique time because the COVID correction was so deep, and
Right.
I think Tesla was clearly showing itself as like the leader, and we and
Yeah.
we held the 20-day. But I think you can almost view this situation like the Livongo and Peloton
That's what I was thinking.
situations.
Yeah.
Yeah, where then when you get this bullish engulfing, maybe you treat this as like the shakeout.
Yeah.
Um, I think that type of thought process is pretty reasonable, given the situation. But I also think with earnings and everything, I think you definitely could have treated this as the wedge drop through the 10-day here for sure.
I think all those bases are like so textbook. You've got the dry up in volume.
Yeah.
You get the price getting super tight. It's a nice chart to look at for sure.
Yeah, I mean, this is like ideal. Like this is the example everybody wants to show, which is why I tried showing some of the other examples where
Yeah.
it's not quite as clean. This is like beautiful. This is amazing action, and um, very technically sound as well with the way it held. You know, my strategy loves situations like this.
Yeah. Yeah. And you had all the top dog qualities coming together. The earnings, sales, the industry group is strong. All that coming together. It's a huge
Yeah,
liquid leader too. So
yeah, everything big, liquid. Really, I think if I would be more cognizant on trading the top 3 to 4 names, like only, like the Teslas, the Nvidias. I'm personally thinking that's like safer than being in like 10 names.
Yeah.
Just because, those are the names that are really going to work the best with my approach. The big liquid ones that move uniformly for sure. Um,
Perfect.
so Tesla sets up again. So this is that wedge drop that I just showed. So this is that extension, the wedge drop. And then what happens is we gap up and we set this pivot. So this is like the wedge pop, which I think you maybe could have had it this day. I really can't remember what I did. I think I might have had it this day. But then it follows through it, and this is like tough to buy something like this because it's not like, I mean, it's tough and it's not tough. Like we clearly clear this area, and this is a buy area. I can't remember if there was a catalyst here. I think there was. Um,
I don't
I
remember
can't.
either.
I can't. I think maybe
Yeah.
that was this. Was this the split? No, that must have
That
been
was
later.
later. Yeah.
Yeah.
I'm not
Um,
sure.
I can't remember, but either way, it comes up, triggers this buy area. Your stop would be like down here, and then kind of when we get followed through, really kind of this ignite bar day, your stop's definitely going here, and really with the ignite bar, you're putting it here. We move up, we base, we reconfirm. You're raising your stop to here. We go up. You kind of get your first kind of profit taking day. Oh, like kind of take note of that. Um, they support it. We reconfirm. You're raising your stop to this area. We move up. You're getting another ignite bar on volume, so you're raising your stop to here. We go up. I'm personally thinking that we're just going to hold here. But then if you, I should have drawn this stuff in, but there's a trend line here. Your ignite bar low, and you'd be stopped in this area, which I think there's no reason. There's a reason why this bar had so much selling, because there's a lot of people probably trading just like me. You got your trend line, and you lose the ignite bar low, which is a bar of significance, and sure enough, you see a lot of selling there. This, I think, I remember this because I bought this pullback here, and it came out that Etsy was getting added to the S&P, I believe it was, and Tesla gapped down, and this really sucked for me because I sold, and you can't win them all. Um, but to continue with Tesla, this was the S&P ad.
Yeah.
So this also I want to highlight on the weekly was the second extension.
Hmm.
So when you get that second extension, at least for me, I expect a basing period. So this was a wedge pop here, which I think you could have taken, but I think you would have had to have taken it with the understanding that you're fighting the second extension. And sure enough, it just didn't really work because we needed to base. Um, but right here, we gap up, we set this pivot, which reminds me of that Peloton example I showed, like maybe the third buyer in Peloton or something. But when we push through, your stop is here. And when we kind of follow through, probably when you take out this area, when we reconfirm, raising my stop up to this range, push a little bit higher, raising it to this day's low. We move up, we pull back, we find support at the 10-day. So just kind of have to note that. This right here to me would be a buy ad area, a little extended for a B buy ad just because of it's kind of moved. Really for me, you want to have your B buy ad like right in here, or like maybe around in here. So this is a little extended, and sure enough, you would have been stopped out of that second buy ad when it fails the day's low here. But you're still in this one, and they gap it down, bullish counterattack. To me, is they're kind of putting the low in this new area, so you're raising your stops to here. And again, you get another buy area here that fails, and that it shakes out. Again, though, notice like these are later buy areas, but right here you're probably selling this day, because we break out, we really get moving, and then so your stop should definitely be to the day's low, and then when the pivot doesn't really hold, you should be getting stopped out on this. And then there is another area right here that ends up working. So it just goes to show you sometimes it takes a couple tries, and that's just kind of how it goes. But your A buy area is fine the whole way. Like that's just the importance of getting the initial buy, because the later you get the buy area, the more prone you are to be shaken out with kind of how I manage my stops. Um, so basically we hold the 10-day, 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 10-day really in this area. Um, and then we reconfirm here, you're raising your stops. If you took this buy area here, your stop is down here. And then when we reconfirm, or sorry, when we kind of follow through, you're moving it to this day. And then we pull back. When you take out this high here, you're moving it to here. But then when we push higher, all positions, all buy areas, your stop is right in this area. We go up, we base, we push through, you reconfirm, your stop is this area. We then get an ignite bar, your stop is this area. Um, this is actually another ignite bar. And to me, if you looked at the weekly, I feel like this was fairly obvious. Richard, I think this was like when I was on your podcast or something,
Yeah.
and talked about how I thought that this was likely going to not be the top, but I thought that we were just so extended that we were likely to reconsolidate. And sure enough, that's what happens. You get a wedge drop here. To me, is really kind of the wedge drop, but then definitely the confirmed wedge drop here, and you go into another basic period. So basically, buy area, reconfirmation, raise stops, reconfirmation, raise stops, counterattack. I think you're raising stops here, but then reconfirmation, you're raising them here. Reconfirmation, raising stops to here. Reconfirmation, raising stops to here. We've defined, in my opinion, it's like 10-day, 10-day, but you're kind of taking it down, and it's really kind of the 20-day. And really, I think Tesla, if you trade it enough, it really shows the 20-day. Its life cycle is a pretty important moving average. And then we start to accelerate, hold the 5-day as we accelerate, into the top. And sure enough, we have a failed breakout here. So if you think about this, even let's say that you didn't sell into this because, that's a pretty good sell. You get some profit taking here. You then have an empty wick candle here, kind of unable to push higher here, bearish engulfing here, just lack of momentum, and then kind of a failed breakout here, an inside bar that trades down. After all this, to me, you've got to be sensing just kind of some weakness. And on this gap down, it holds the 20-day, but like right here, if you were still in it, you would have to be gone, because we'd held the 20-day the whole time, and we take out this day's low after it's supported there. You have to view that as your stop area. So I think at worst is you took this from, I'm going to say 450, even though it's a little higher, to 800. So it's like a 50-60% gain or so, give or take. And that's, again, Tesla just trades so technically sound. It's it's really just the best stock to trade.
And there was a question here. When you ultimately end up selling your position, or a portion of your position on that day, are you selling it all at once, or are you selling it throughout the day as the stock continues to weaken?
I mean, when you say when the stock continues to weaken, which day?
I guess it depends. Like on a wedge drop, do you
Oh
sell it
yeah, I
yeah,
sell it. I get out. Yeah,
yeah,
I just sell it.
okay,
I mean, I'm not running, $1 billion, so I
yeah,
can just get out.
cool,
Yeah.
yeah. I think that's the only
Um,
question I had.
okay, cool. So the next relevant, I want to show you again. I want to show you some trades that just don't work out that great. So Tesla corrects, and it has a reversal extension here. It comes up a Tesla 20-day, and it sets up, and it has a wedge drop or pop here. So this is a buy area. It then flags. This is the crossback. I thought, we were back to the glory days in Tesla. I had bought this and I had sized this because, like, look at how great the risk reward is here. It's an inside bar right into the 10 and 20-day. And then we break out. So basically wedge pop stops here, come back. If you bought this breakout, your stops down here, and then when we kind of follow through, your stops here. This is an ignite bar. Your stop is here, and I gotta say, I was pretty fired up. And then we kind of get this reversal bar, which made it not quite as exciting. But then we support here, and I'm thinking, okay, this thing's gonna push back up, and then I got stopped out on the ignite bar low. And it's just an example of, from your first entry, what it works for 50 points, like 7 or 8. Your second entry, let's just say it was a scratch, and it ends up trading back higher. And but at worst to worst, your max wedge drop was here, and it just doesn't work. The trade just doesn't work, which that's how it goes. And in reality, is what happens here is you get a wedge drop across back, and this ends up being a short sell. Um, but so that's just an example of a trade that just looked promising. This had a nice base at this point too. So
Mm-hmm.
if it had worked, like you could almost thought it was like the bottom off of COVID, where this could have really, really been a big winner, and it wasn't. So that's just kind of how it goes. But is what it needed to do is kind of reset and build a base into the 200 day, and it came up here, and I was a little suspicious of this breakout here personally, because I had been looking at the volume on Tesla on the weekly, and it looked like there were no real big players involved in it. But that's neither here nor there. We break out. So if you break out here, your stop would be down here. And then as we follow through, you get it to here. To be transparent, I didn't take this trade because of what I just told you guys. But it worked, and I did get involved in it here on the gap down on earnings. It had a bull flag, it gapped down, it had an outside reversal, and it traded higher. So your stop on this area and this area, once we reconfirm, would be this day's low. Kind of once we follow through here, I think on this buy area, you want to try to get your stop around here. I think on buy area A, you would still leave it down here, just because you got a good price, you don't want to choke it off. But then when we gap up and push ignite bar, you want to raise your stops. So you get reconfirmation, ignite bar, raise stops. This is kind of that fourth day shooting star that just doesn't matter as much to me. Then you get a wick play, which because of the wick play, I think you play this buy area. I did. So on the wick play buy area, you're buying through here. If you want to give it a lot of room, your stops are here, but I think you got to keep your stop here. And then for your buy areas A and B down here, now you can raise your stop here. When we reconfirm on your initial buy areas, you can keep it here now. And then when we move up again, definitely to here, but on this ignite bar, I think you're keeping it at the ignite bar low. That's what I did. We trade inside, we reconfirm here, you raise your stops to here. And then this is a tough one because we reconfirm, but we don't follow through. And then you get the gap down, which I can tell you, my stop was in this area now because we reconfirmed my stop was here. And the gap down sucked because it basically gapped here, and the 10-day was right there. So I decided to give it to the 10-day, and then I got stopped out through this day's low. Um, you know, I guess you could say in hindsight, when this traded down and reversed, you could have got out here. But, I think that's kind of hindsight. Notice how we did gap up, though, and they sold it from red to green. I think hopefully you can see that consistent theme. When they're ready to start selling a stock, they like to gap it up, the institutions, so they can unload their shares at a better price. And that's this traded Tesla. I had much, much higher hopes for this. Just to be straight up, I thought we were going to hold here and maybe recover and continue. But it just didn't work out that way. And like I said, I haven't shown here, but I personally think Tesla currently, and I think it was sort of confirmed on Friday, is showing very similar characteristics to that Feb 2020 top.
Perfect. Yeah, I don't see any questions, so I think we can keep on with the examples. We only have two left, I think, and then
Yeah, so
yeah,
we'll blow through these. I know we've been on here for a long time, but
yeah,
so SI, we've been over this before. They had a secondary, it broke out. So I'm not going to go through this, but breakout, your stop would be this day, probably down here initially, but then when it falls through, this day's low, come up, pull back, reconfirm, stop here. This would be buy area B. Go up, pull back, reconfirm, stops to here, kind of follow through, put it to here. To me, this, if we had one more day here and gone, I would have considered it reconfirming. But kind of once we push here, now I think you can raise your stop. We move up, first sign of profit taking, second sign of profit taking, but we build a flag, we reconfirm, stops up to this area. At the time, I had thought this was a second extension, but in looking back on it, I think I'm price fitting. There really wasn't a second extension. I think this is probably the first extension. We pull back, we hold the 10-day. There's a trend line drawn here, and then when we lose this trend line, there's a big shakeout, and this is what you're going to get with these less liquid type names versus like a Tesla. You're going to get crazy moves like this. But couple just signs here: profit taking, to me, an empty wick, profit taking. This kind of sell down here is not the best sign. And then you get that gap out down, you got to be ready to sell on this thing. I can't remember. I think I was caught in this for part of my shares, but I think I got out of it okay. I know some people who got filled, unfortunately, they got filled literally down here. Like this thing flashed down. And that's what you're going to get when you trade these less liquid names versus like a liquid stock. So you just have to take that into account when you're trading the stock.
yeah. I was one of them, unfortunately.
Sorry, man.
No, all good. I got a pretty good entry on that, so it didn't end out too bad. So, yeah, I don't see any questions about this one, but yeah, I think we can.
All right, we'll keep moving. I know people are probably getting tired. I'm sorry.
No, all good. This is great though. This is awesome.
Okay, cool. So SSYS. So SSYS and Triple D were great trades for me earlier in the year, and they occurred on this day for Triple D. I think I don't pay that much attention to the news, but I think they like raised guidance or something. But the volume was just like massive. And I had traded these things in like 2013. And I won't lie, I have a personal bias to trade SSYS over Triple D. I took them both, but SSYS was my focus. And basically, it bull snorted. It traded tighten inside. This is the buy area. Your stop would be right here. As it kind of follows through, your stop is here. As it reconfirms, your stop goes to this area. Same deal as it reconfirms again. Your stop goes to this area. Ignite bar, stop to this area. Reconfirms, stop to this area. To me, this is a concerning bar, but there's no volume on it. See the dry up, so it really is not meaningful. This is your first kind of profit-ish taking type of bar. Right here, we reconfirm, stops up to this area. Trade inside, trade down, hold the 10-day again. We sort of build a little shelf, and I think this is your stop area. I think one of the things to note here is the personality of this stock is it's a real high flyer, and it's also off the lows. So there's a lot of overhead resistance, and you've got to respect that. And then I talked about earlier noticing a change in character and kind of weakness in your stock. It had traded up. This is like a frozen rope, sort of like that AMBA example. And we started to trade sideways through this trend line that it had really held strong the whole way. So you got to be alert for that and, just get out of the way. This is also an empty wick up here. I think I took some off in here and then got stopped out of the rest. I think it was on like this day, even though I think I got stopped out of the rest here. And then I was like, oh man, this is going to rip higher. But then it ended up kind of falling apart. And you'll also notice, I didn't have the 5-day at the time, but notice how the 5-day kind of shows you that change in character and that it starts to slope down before this shelf break. But this shelf right here, I think really this day, if you're being honest, this is where you probably would have sold through this shelf and then you would have regretted it. And then the next morning you would have been like, oh, thank God. And that's SSYS.
Yeah, I'm not seeing any specific questions on this one. So I think that's all the examples. We've got your homework. Oliver, you go to the next slide. It's basically to mark out the chart of TTD with basically what Oliver's been showing, going through the buy, sell, position management spots, where you would move up your stop, all of that. So I definitely want to see everybody watching to post that on Twitter, tag us, and yeah, definitely get that submitted, and we'll give you guys some feedback. But with that, I think we'll cover the 3 bar break pretty quickly. Oliver, if you want to go over
Okay.
to Thinkorswim.
Yeah. Let's see. So, what do I got here? So yeah, I'll show you some examples. So Asan, um, I had been trading Asan, in this area, and this is a 3 bar break right here, where
Mm-hmm.
it gaps up and it takes out all these bars. Um, and that's really a major day to take note of because it's on volume and it's just very uncharacteristic of any other price action we've seen. And sure enough, tries to break out here, fails, tries to break out here, fails. There's so much distribution taking place here, in my opinion. You're getting just not great action here, false breakout here, followed through down, false breakout here, distribution type action here, just a reversal candle here. And this is wedging action where you're taking out the highs and unable to push higher.
Mm-hmm.
Um, and then sure enough, I mean, one day it just explodes and gets pounded. Um, but it all really kind of started with this heavy downside bar.
And
Um,
and to define it, correct me if I'm wrong. It's basically a short consolidation structure, and then 1 bar takes out the lows,
yeah,
all in one day. Yeah,
exactly. So if you think about it, this bar took out like 4 to 5 days of price action. Just
right.
so that's significant. And it was kind of what I said, where Trader Florida teaches, like you get 3 or 4 signals. Like if this is the shot across the bow, like this is almost kind of 2, this is sort of 3, this is 4. And I mean, by the time we lose this area, the writing was kind of on the wall, in my opinion. So that's an example of a 3 bar break. I would recommend, going back and reading chapters like 10 and 11 of how to make money in stocks. Like, like net is another stock. I know a lot of people traded. I did. And it fades on earnings and comes back up. This is like railroad tracks. Like that's another thing you can utilize. And sure enough, we test the top of this fail, and then this thing falls apart. Um, so, and I think Dawkins was another one a lot of people were probably in. I mean, this is definitely a 3 bar break. There wasn't, in my eyes, there weren't like major reasons to think this would happen other than it was very, look how extended you are from the 10 week. This is an example where you're so extended from the 10 week. Like if the stock did pull back, like it could pull back to like 100 and not be totally broken. So that's just an example where you're fairly exposed. But if you were to kind of look at this one, just because I know people are trading this, you had a breakout or ignite bar here on earnings, stop here, go up, pull back, reconfirm, stop here, go up, pull back, reconfirm, stop here, stop here. And there's no mistake why this was such a huge sell down, because a lot of people who trade like me were, 10-day / this day's low. You gotta be careful. Yeah. And so yeah, I mean, Richard, I guess while we're here, maybe I'll just look at the NASDAQ real quick. So
Sure.
I'm pretty not high on the market. I think we got a reversal here, that to me wasn't a reversal extension until after the fact. But I think we then put in a lower high here. We had a wedge drop here. I think is what we saw this, Thursday, Friday was a crossback. And I am not very positive on the market. I think if this weekly breakout fails down through here, I think because of how far we've come, I think that there's a a lot of room, maybe down to the 200 day. I don't know. But I think that if you pay attention to the cycle, we've had our extension, we've had our wedge drop. I personally think this was the crossback, and things can happen much more quickly to the downside. But
Right.
I think we're definitely going to get at least a basin break and then a washout. And there's no way of saying we don't get two basin breaks. Like, could we hold this 50-day here on a back test of this breakout? Sure. But I take a lot of my signals from Tesla, and I look at Tesla and I think that we had a subtle unfilled gap here showing weakness. I think this is major distribution. I think this is distribution. I think this is a second lower high. And I think that this was, a wedge drop right here. And I think that this is going to play out. I think we're seeing the 5-day cut down through the 10 and 20. I think once you see the 10 cut through the 20, if we lose this area next week, I think it's the 50-day to me is unlikely to hold if that happens. So I think the next logical spot would be to fill this gap. And personally, I think if you go look at Tesla in 2020, we went all the way back to the 200-day. So look, I don't like to make calls because I'll kind of change my mind if I have to, but I personally think we're likely to fill this gap, and it wouldn't surprise me at all if we traded back to the 200-day moving average. Then I say that just because when I go look at Tesla here, where I kind of think it looks similar, that's what we did. So, we'll see what happens. I have no idea. I love the stock, so I hope it repairs. But that's kind of what I'm thinking, and I don't see a lot of fear in the market. So we'll see what happens. But I'm not very optimistic right now.
Perfect. Yeah. But corrections create so many new opportunities. So we look forward to the next uptrend.
Oh yeah, absolutely. Honestly, we need it. It's going to make the market a lot easier to trade. So I'm looking forward to it.
Perfect. Yeah, that's pretty much it for today for webinar 4. Thank you guys all for sticking with us for I don't know 4 hours and change. This has been a marathon, but so many valuable pieces of knowledge that Oliver shared, and I especially really enjoy going through the charts and seeing the position management pretty much in real time. So yeah, there's a lot of thank yous in the chat, Oliver. So it's great to have you guys with us. Enjoy the rest of your weekend, and we'll see you guys in webinar 5 to finish this thing off strong. And take care, everybody.
All right, thanks, guys.